Hi everybody, it's Peter Schiff. It's Friday, October 8th, 2010. Well, the Dow closed the week above 11,000, I think for the first time since mid-May. But of course, the Dow managed to gain, I wrote it down here, 1.7% on the week. But to put that gain in perspective, gold gained 2% on the week. Silver gained 5% on the week. If you look at the CRB index of commodities, that basket gained 3% on the week. So it's really, again, not that the Dow is gaining value, that the dollar is losing value. Of course, it's not just the dollar that's losing value, it's other currencies. The dollar index dropped 1% on the week. I think it closed under 77.30. But given that the dollar index dropped 1%, but gold rose 2%, means that other currencies lost value too. They just didn't lose as much value as the dollar. I read an article today about the currency war, and the quote was that Europe was in the currency war, but it was like they were standing on the front lines and they weren't firing a shot, meaning that they weren't taking active measures to debase their currency. Now, of course, as I said before, if they actually wanted to take a shot standing on the front line in a currency war, what they would do is they would turn around and then they would fire on their own troops. I think Europe is smart enough to know that the way you win a currency war is you don't shoot. Because all we're going to do is shoot our own troops, our own citizens, and if we might win the war, but at the expense of losing everything else, because our citizens are the ones that get shot. Also, when I'm talking about the movements on the week, the gold stock index, the HUI, was only up about 1% on the week, despite 2% move in gold, 5% move in silver. And again, this underperformance of gold stocks shows me that there continues to be more fear than greed in the gold market. Gold is not in a bubble, it is simply climbing a wall of worry, and proof is that there's very little speculation going on in the gold mining stocks. I still think this sector is undervalued because so many people are afraid that they're going to be buying the top, and so they're not buying. But real money continues to move into bullion, even as speculative money remains on the sideline, fearful that they're going to be buying it on the top. And that's not the type of mentality when there's a bubble. That is a classic bull market scaling a wall of worry. Also today we got information on jobs from September. We lost 95,000 jobs. And the reason we lost so many jobs is there were a lot of layoffs in the federal government, a lot of census workers, and state and local governments laid off some people. Now, normally that's good. I mean, we want governments to shrink. We want governments to lay people off because the people who are working from government are not helping to improve the productivity of the economy. They're actually depleting our resources. We're all poor because people are working for government. We need them to work in the private sector productively. Unfortunately, even though the private sector created some jobs, I think there's around 60,000 some odd jobs, they're all in the service sector. These are also, in most cases, they're not goods producing jobs. People who work in the service sector are spending money, but they're not producing products. We lost 22,000 goods producing jobs during the month. So the economy is not generating the private sector productive jobs that we need to absorb people in other sectors like government who are losing their jobs. But the reason for that is government. The reason for that is there's so many regulations and so many taxes that it is very difficult for the private sector to generate jobs because the people who would normally create those jobs can't do it. They can't overcome all the hurdles that the government is placing in their path. They can't overcome the regulation, or maybe they can't overcome the taxes. They don't have the access to capital, whatever it is. As I said myself, I'm here in Anguilla right now. And again, I'm not moving out of the country, but I am setting up a business outside the country to service my foreign clients and to further develop relationships with international clients. Now, I could do that from the United States, but it's so much more effective for me to do it outside the United States where I don't have all the regulatory hurdles that make it so difficult and that add to my costs and that ultimately would make my venture less competitive because I would be competing for international clients who have the ability to open up accounts all around the world with brokerage firms that aren't facing the type of regulations that I'm facing in the United States. And of course, there are some other things that I can do offshore much more cost effectively than I can do onshore. But all of that is the fault of government. The unnecessary costs that I'm avoiding are regulation first and taxes second. labor cost, wages aren't even a factor in my thinking. And I think that's the same for all companies that have been doing this for years. I mean, I'm kind of late to this outsourcing game. I was very reluctant about it, but a lot of businesses have been doing it for a long time. And I think they're going to continue to do it. And, eventually, I think a lot of American citizens are going to be leaving the country because if the jobs leave and the capital leave, well, the individuals leave next to follow it. I think that 10 years from now, you're going to see communities all around the world, little America towns, with expatriates who have left and have congregated in certain areas for employment opportunities. One day, families in China, they might go out to get pizza in America town. And I wouldn't be surprised if things get so bad in this country that 10 years from now, Chinese mothers could be talking to their kids and trying to convince them, to finish their vegetables, eat their meal, and they might say, look, eat. There are children in America starving right now. And you think I'm joking about this, but I'm not. If we continue with this monetary policy, based on the weak jobs data that we got today, the Fed is ready for this next round of quantitative easing because it's determined, to win this currency war. And, there are other countries that are playing the game. They're playing it in Japan. I guess they're playing it in the UK. But, the problem is this whole concept of, this race to the bottom. It's kind of like, we're the leader and everybody is following us. It's like you have a classroom and everybody is cheating off the same guy. The problem is they're all cheating off the dumbest person in the class, so everybody is going to fail, right? The most important thing to do is to have a solid, sound currency. There is no reason to try to debase your currency. Politicians think that it's going to benefit them, but it's not. Also, Greenspan was out, I think, yesterday, making more comments about the deficits, about the unsustainable path that we're on, about the scary deficits, of what's going to happen. And it really, bothers me every time Greenspan talks about this, because he's the reason that we're on this path. He had a chance when he was a Fed chairman to do something about it. He could have reined in the growth of deficit spending. He could have been independent. He could have not slashed interest rates. He could have raised interest rates far more aggressively when he was Fed chairman. He could have prevented all these deficits because he would have made them too expensive to finance. The fact that he can actually light this fire, set the blaze, and then criticize everybody else for not putting it out, but for adding more kindling, he's the guy that started the fire in the first place. He nurtured it. He made sure it got to this position, and he put Ben Bernanke in a position that he's in. Because, of course, if Alan Greenspan were Ben Bernanke, he would be doing the exact same thing, because Bernanke is simply doing what Greenspan did. It's just a natural extension of that policy. Also, we got another statement from, I think it was Larry Myers, who was a Federal Reserve governor, who was on CNBC. And talking about the data, he said, I think I'm quoting him, he said, you're not going to sit on your hands. You shouldn't sit on your hands. You should do something and hope for the best. This is what he said. Do something and hope for the best. Hope. I mean, this is the equivalent of a monetary Hail Mary. That's what this quantitative easing is. There's a Hippocratic oath, do no harm. We should make central bankers and politicians take that oath, because sometimes it's better to do nothing, especially when what you're doing is damaging the economy. Hope for the best. Let's throw a Hail Mary and hope we catch it. The problem is there's no chance we're going to catch this Hail Mary. We don't have any of our own players in the end zone. I don't even think we have any players on the field. There's no chance this is going to work, yet we're going to throw this thing up there anyway. One more thing I wanted to mention really quickly was this idea about all these banks now suspending their foreclosures because there's been some problems, technical violations, all the paperwork wasn't filled out right. So a lot of foreclosures are not being made. And I think, again, as this gets out, more and more Americans are going to see more reasons not to make their mortgage payments. Because once they realize that there's a good chance that their lender can't foreclose, and the foreclosure process already takes a long time. I mean, you could stop paying your mortgage and be in your house for a year or two. I mean, this could extend the process who knows how long. So I think a lot more people are going to take advantage of the fact that they think they can live rent-free or payment-free because the banks are not going to be able to foreclose. And of course, everybody is vilifying the lenders. The lenders are trying to get their money back. They loan money to people. They're not making their payments. And if you make it difficult for people to foreclose, then nobody is going to want to lend, which of course nobody does. All the lending is coming from the government, and that is the problem. And of course, they're not lending real savings. They're just lending the printing press money created by the Fed. Anyway, that's it for today. I'll be back in Connecticut next week and blog again. Take care.